All right, good afternoon, and you are welcome to the first ever lectures on management accounting. So we are looking at the introduction to management accounting. All right, this lecture will be useful for those of you who are doing introduction to management accounting as a paper in Ghana for ICAG. It is also useful for those who are writing management accounting under ICAG, ICAN, ACCA, ICAE, England and Wales. All right. Those who are writing all forms of professional exams and university education, senior high school education is useful for everyone. Now, here, when we are going to look at the introduction to management accounting, there are 4 areas that we are going to look at. We are going to look at what management accounting entails. So what is management accounting all about? All right. Not only that, we are also going to talk about data and information. Data and information. Then we will discuss some ethical issues in man accounting. Some ethical issues. Then lastly, we will look at the growing trends of what management accounting is all getting to these days. So we are going to look at the impact of technology and sustainability. So technology and sustainability. All right. So our first lecture is going to cover these major areas. All right. And so that is that. So let's pick it up. Let's start off with management accounting. Management account. Now, so that's the first thing we want to look at. Now, you could see clearly that this word is a combination, or this course is a combination of 2 words. We have one side, we have the management. I'm going to cut it short like this. And on the other side, we have accounting. So we need to understand the two and bring them together. All right. Now, whenever you hear of management, what comes to mind? When you hear of management, I guess what comes to mind is planning. All right. What comes to mind is organizing. You are planning, you are organizing, you are directing, you are controlling, communicating, and probably motivating people so that you will be able to achieve organizational objective. So yeah, you want to achieve certain objective and you go through this process through planning. All right, you plan, you organize people, you direct the people, control what is being done, you communicate well, all right, motivate, all right, so as to get things done. One of the definition we learned in senior high school about management is getting things done through other people. And the things that you are going to get done is the things that you plan, you organize, and so just to achieve your organizational objective. So basically, that is what comes to mind in terms of management. Now, and so you must understand that in an entity, you realize that all these activities that are unfolding are going to take place in a 3-stage management level. So we have the levels, all right? We have levels of management. You have the levels of management. What happens is that you see that to get the things done, some people sit at a very strategic position. So in management, the levels, we have strategic management. And I remember in university, we did strategic management as a course on its own. All right. Then we have tactical level, those who are the tactical level. Tactical level. So we have tactical. Then we also have those who are at the operational or control level. So we call them the operational management or operational control. All right. So basically, that is that. So you do realize that in your office, you see that some people hold manager positions. Some people at some places, they'll tell you that they are going for this meeting and all those meetings and probably are not part of it, right? Okay, so this is because of the levels of management, the level of getting things done. All right, so those who are at the strategic level are those who are looking at the long-term objectives of the entity, the long-term objectives. They are interested in the long-term objective. So they set what the organization is all about. Now we call these people corporate strategists. All right. So these are the people who are making strategies for at the corporate level. They sit at the board level. All right. So that is that. You see these people at the board level. So we normally look at these people from the perspective of board of directors and staff. All right. Because they are looking at things on long term, deciding the objective. All right. Now, when they do that, they must therefore, since they know the objective, they must therefore come up with policies and values. All right. So when you see mission, vision, core values, and all those things, these are the work that are done by those who are at the strategic level or the corporate wise. All right. So because of that, they need to now organize resources. All right. To enhance them, achieve these objectives. All right. And so when they are doing the analysis, they are more of external users of information, because both external and internal, because you will see that they need information mostly like a pestle analysis. They have to do pestle analysis, political, economical, all right, social, technological, all right, all those legal analysis coming together, because they need to do that to be able to ensure that they have proper mission and vision for the organization. So that is that. That is the level of, that is where they are in terms of the level of management. Now, you see, they provide the resources, but these resources need to be organized, all right? They need to be organized. So that one comes to the tactical level. So at the tactical level, who are the people? Your managers. So head of department. So departmental head, departmental managers. All right. So the departmental managers, these are those people who are at the tactical level. All right. So these are the people who are displayed. So now you see that what they are interested in is to tell those who are at the operational level what to do. So these are instructive levels, okay? So they know what these people, so when these people decide the objectives, example, we want to be the leader of the proper management accounting tuition center under Universal Institute for Professional Development. So let's say if you pick UIPD, which is this class, all right, Universal Institute for Professional Development, we want to produce the maximum number of students who will pass management accounting. So that is our long-term objective. So we said that we want to have 80% pass rate, 80% pass rate, or let's say 100% pass rate. So that is what we want to achieve when it comes to man accounting. Now, I'm your tutor for man accounting, and my name is Ansa Thomas. And so these are what the board of the Universal Institute of Professional Studies are saying. Now, how do I get it? So, and at this level, you will see that there needs to be instruction. So when I get this message, I'm a tutor. I'm a tutor. So now what is going to happen? I know something has to be achieved. And so therefore, what do I need to do? I need to now organize resources. All right. So these resources that has been given to us. So the organized resources are going to be distributed. So these people are interested in distribution of the organized resources. So that is what is going to happen. And I'm going to give instructions so that the people who are at the tactical level, or sorry, the people who are at the operational level will use the resources effectively. So you see, my objective here is to meet target. So therefore, it is about being effectiveness. So effectiveness. So we call this place effectiveness and efficient allocation of resources, of organized resources. Efficient and effective allocation of organized resources. So when I get this, I'm going to allocate them. Okay, so I'm going to allocate them effectively and efficiently. So it is about effective and efficient distribution of the organized resources. So that is what the tactical people are to do. So this place is very instructive. So what they do is to give instruction. All right. So directing is mostly done here. And supervision is done here. That is what these people are set to do. All right. Because, and what they are basically doing is to help them achieve the pressure that has been laid on them. So now what is going to happen is that we are going to issue that timetable. All right. We are going to teach you. We are going to give you resources. All right. So that when you join, say UIPD or Tema Accountancy Center, or let's say Prof Training Solution, these are all places that I teach. All right. So that you will be able to have the pass mark, and we will also have our pass rate. Basically, that is that. Now, all these things that they are doing, the resources. So if this entity, the board of directors of UIPD, wants to achieve that, then they need to set up people. So let's say head of level 1. So basically, that is that. Head of level 1. These will be the tactical. Head of level 2. All right. Head of level 3. So head of the knowledge level of the professional course. Head of the what do we call it? The experience level. All right. Then head of the professional level. Okay. So basically, that is that. So level 1, level 2, level 3. We have heads. All right. So we'll make sure that these things are done properly. Then the individual lecturers that are there, those are the people that the resources were allocated to. And so when it comes to the operational management level, what you will see is that the same thing is going to happen. We are going to make sure that there is effective and efficient use of distributed resources. Because these are the real people. Here, what happens is here is that you see the real staff. These are line managers. So the manager, so if you have an HOD, if you are a manager in a company, your job is not actually to exert yourself in the daily work, because operations is daily. These are people who are doing the daily things. All right. So that is that. You give them guidance as to what to do. So if these people are failing, then it means you, the manager, you failed. That's as simple as that. It means that you didn't direct them well, supervise them well. You didn't give them the resources well. So basically, that is that. All right. So take note of that, because these people are working based on instructions. So these people work based on instructions. Based on instructions. So they take instructions from their line managers, then they adhere to it. It's as simple as that. All right. But if you get a staff who is using these resources effectively, then you see that this is what happened. The person will grow into this position, become a supervisor or head of department or something, and very soon you see the person going for corporate strategic meetings. So that is that, and it happens through diligence. So you see that under each stage of this management level, there is some sort of information that they need. There is information. They need information to work. All right. They need information to work. Basically, that is that. All right. So we know that, of course, there is a distinction between what we call data and information. So, I mean, when somebody comes to buy stuff, all right, some people are recording it in probably the day books. And these are the other essence of what we call the accounting part, because somebody needs to provide some sort of information. All right. So, and that is what accounting comes in. Now, you see, accounting simply means you are being accountable. Basically, that is what it means. Accounting has is not anything than being accountable for something. So something has happened. You need to give us the record of that. So when you look at accounting, of course, most of you have done something accounting. What happens is that in the accounting perspective, we are going to see to it that you are recording transactions. All right. When you record, you need to classify the transactions. So there is something called classification. So you are putting it. So recording is what we call bookkeeping. So you are posting it in the books of original entry. So sales day book, purchases day book, and all those things. Then you are going to classify them into ledgers. And those of you who have done accounting have an idea about that. You put them into ledgers. So when you finish, you are going to summarize them. You are going to summarize them. So you see that you are summarizing, and the summary, you do a summary in terms of control accounts and trial balance. So you summarize them. You can watch my video on basic accounting. You will see financial accounting. After you have summarized them, you need to communicate to us. So there is communication. And now you are going to communicate. All right. When you communicate, so you are going to tell us the statement of profit or loss or statement of financial position, the balance sheet. So where we are. Then, in fact, you need to analyze it for us. So basically, that is that. Some put the analysis before the communication. That's fine. So all these things you are doing, you are going to help us do that for both internal and external purposes. So generally, we say accounting is for the users of accounting information. All right. So now, if we pick it from the management perspective, those who are here, the internal people, they need what you did here. All right. So they will take it. And so that is when you are doing this part of the things, the bookkeeping is just gathering of data. All right. Then you process it through these things. So this one, you'll be doing performance measurement. This is where you do the ratio analysis and all those things. All right. So you take this data. Now, where do you think in these levels are the data coming from? Obviously, it is coming from the operational people. So that is it. That is where it is coming from, obviously. So those people who are doing the day-to-day, activities. So these people, you see, the information is that they take things, everything is immediate, because you see, they come into contact with the real operation. So what you see is that information from there is immediate and it is very specific. In fact, if you are a manager and you are giving them information, it has to be daily and it has to be specific. Sometimes it's a routine, and so everybody knows what they are doing. But when the information is coming from these people to the managers, their HOD, it must be very detailed, specific but detailed. All right. So that is that. You see that it is real-time data. So if I ask you how much was bought, how many students are in the management accounting class, straight away I should be able to say, because I'm at the operational level, I should be able to say. So you see, in a business, this thing, what they give is in the form of a sales report. They give sales report, staff schedules. So these things comes from here. Take note of that. All right. Now, that detailed information will come here to those who are at the tactical level. those who are going to see to the supervision or see to the implementation of stuff. So you see that the detailed information for the tactical people, they also come. So detailed, they receive detailed information. You see, that is what is happening. So the report, very details have come. So that is what they do. And these people use this information. Who is responsible for preparing your monthly management account is the manager. All right. He is the manager. They will use the detailed information. All right. And they will summarize it. Right. They will summarize it. So that is what you see. They will summarize the information for you. All right. And out of that summary, what you see normally is that, let's say you give them everything, they use it. So these are the people who are doing the budgets. They will use the information to prepare budgets. They use this information. Some use it for determination of KPI, to also determine project timelines. So these are what managers are doing. All right. So that is that. So these are the information because they need it. Why? Because they don't keep anything. They are going to also transmit the information to those who are at the strategic level, the board levels. And so when the information is coming here, what you see is that this information is the most summarized information. It is the most summarized information. And you see, that information that they need is future-oriented information. All right, it's future-oriented information. So even if you give them the balance sheet, which is historical information, they are going to make sure that the P&L you give them and the balance sheet you give them, and these people are supposed to use that to determine the budget, all right, for the next year activity. And so you will see that these people are so future-oriented. They take it in the most summarized form. So what they need, you see that it is in the form of annual report. Annual report. All right, and usually these things comes in graphs and pictorial views. So you will see that they are showing slides. All right, and that is what they need. Information they give to people are futuristic. They receive summarized information to determine the long-term focus of the organization. So that is the information need. So now what you've seen here is that the data that is obtained is processed. So data simply means what? Unprocessed information, all right? Raw fact, all right? Data is just raw fact. It is unprocessed. So as it passes through this, goes to this channel, you see it is processed, all right? And therefore it becomes information. So basically that is that. These are what people, now these information that are coming. So the information is here. It gets to information. Here too, it is information. The information that are coming, what are they going to use it for? Or the information that comes here, what is it being used for? You see, management accountants need accurate information, because if the information that you are giving is not going to help, I mean, then what is going to happen? On what grounds? Because these people who are here are decision makers. The people who are at the strategic level, they are decision makers. That is that. That is that. And the people who are at the tactical level, they are control. They are giving you controls in terms of directing you, supervising you to show you what you do. And the people who are here are the primarily for the primary activity bearers. So these are people who are actually doing the work. All right. So they are doing the hands-on work, which are being controlled, and the information is relayed to these people for decision making. So if we will pay bonus, it is depending on how these people control activities. All right. So this is where the activities are. All right, they receive every information, prepare financial statements, all right, which they will give to these people in the form of reports, and they will make a decision as to whether we are supposed to pay bonus or not. It's as simple as that. Is that okay? So that is that. So therefore, the information that needs to come, the information that we are talking about should have some characteristics. So we are going to learn the characteristics of a good information. All right. So remember, in accounting, we say that qualitative information, if the information should be quality, then it means that it has to have fundamental qualitative information. You remember where we talk about relevance and faithful representation? Faithful representation, you remember, right? Then we talk about the enhancing ones, where we talk about, so this one separates useful information from non-useful information. Then this one separates more useful information from less useful information. So you see, they talk about comparability. They talk about verifiability. They talk about timeliness and what? Understandability. So these are what you learned in financial reporting, right? So the same thing, when we are looking at in management accounting perspective, the information that is to come carries the acronym accurate. Accurate. So management accounting information should be accurate. When we say A stands for the accuracy itself, all right, it stands for accuracy itself. What do we mean by that? Information should be purposeful, all right, and faithfully represented, all right. It should be right. Basically, that is that. And when we use the C here, we are saying that the thing should be complete. So you don't give half information. So you have to give full information. It has to be detailed enough. And if you remember what goes into faithful representation, it is there. Because if you learned your FR well, you know that this one means it must be complete in terms of the figures and the numbers. It must be free from error, and it should not be biased. So these are the things. And we say these ones too should have predictive and confirmatory value, right? That's what you learn in financial reporting. So when we talk about in man accounting, the information should be complete, all right? That is that. And this C is for cost effectiveness. Cost effectiveness. What we are saying is that the benefit of the benefit that that information will bring should be greater than the cost. All right. So that is that. U is like the financial reporting one, understandability, or it's supposed to be understandable. All right. Understandable. Meaning that you should limit the jargons that are in the information. You should go straight to the point. All right. R, you can use R for relevance. Okay. So like this one, the FR one. So it has similarities, relevant. Okay. So it should speak to what we need. All right. You can also talk about the fact that A is authoritative. 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 All right. So, and by that, we mean that the information should come from a reliable source. All right. So that is that, reliable source. T is timely. Timeliness. And E is easy to use. The information should be easy for use. All right. So these are the qualities of a good management accounting information. So the information that is coming should possess these qualities. All right. So that is that. Now, assume when they take the information, what are they using it for? And we have already outlined that in terms of the what we call the management accounting responsibilities. What management accountants do. All right. What they basically do. So take note of that. Management accountant also, or management activities. The management activities, you have seen it. It's basically three responsibilities that are being performed, but we can extend it. So what is the function of the management accountant? What are they doing exactly? What are they all up for? So you realize that management starts with planning. They plan. Management, what they are doing is planning. What is planning? Deciding what to do, the long term, when to do, who is to do it, then how is it supposed to be done? So these are what they are doing. Management. All right, these are what they are doing. Now if they get all these things, all right, what happens? They make decision. So decision making is the next thing. So that is that. They go ahead, they make decisions. Once they make the decision, they and the decisions are being implemented, they control. All right, so that is that. That when we say control, we are trying to say that you see, at the planning stage, what you are doing is that you are identifying your objective. Okay, so what to do? You need objectives. Okay, then you gather information. You gather information about what to do. So you gather all the information, and that will get you to have alternative ways of carrying out those objectives. So now in decision making, you will select the best alternative. Select the best alternative. Decision is just by making a choice, making a selection. So you select the best alternatives out of this one. Then you see that because you are selected, you implement. Implementation is happening. But you see, you had a plan as to what to do and everything. So now, at this stage, you are comparing the budgeted, what you thought to be done. So this year, you said you want to pass your ICAG, right? So that is something. So you went through all the YouTube platforms to see whose video to watch, and you landed here. Amidst all the people teaching man accounting, you decide to rest yourself here. So that is you making a decision. And I will give you certain things to do. Watch the video, practice, all right? Buy my MA book. Anyway, my MA book is the most expensive book in all the ICA books because management accounting, you use that book for introduction to management accounting. You use that book to write management accounting. And that book is also useful for you in your corporate strategy. So you see, it's volume, the big book, all right? The very, very big book. That is that. And the price is actually 400 Ghana cedis, but I have discounted it to 350 Ghana cedis. All right. So basically, that is that. All right. So that is just that. So you get all the resources that I'm. So then at the end of the day, did you pass? So the actual. So you realize that we will be doing some variance analysis. We will be doing selecting. So this is what your management accounting is all about. So now, management accounting, this place, when you are doing all your planning and everything, we call it budgeting. You will be learning budget. You'll be learning budget, all right? And it carries a junk mark in your exams. You'll be doing decision making. So the decision making, we have long-term decision making, which includes investment appraisers, all right? Then short-term decision making. So make or buy decisions, further processing decisions, relevant costing, and all those things. All right. So you will do that. Then we will be doing variance analysis where the CVPs will be here, cost volume profit, and now we will be doing variance analysis. All right. Sorry. Yeah. We'll be doing variance analysis on these things that you decided to act on in comparison with your budget, and we'll be doing some variance analysis, both the basic variance analysis and the advanced variance analysis. So that is what we'll be doing. So I wouldn't want you to look at this topic in isolation. just understand that everything we are doing is feeding into this first lecture. All right, it is feeding into this first lecture. So you will need this first lecture. You really need this first lecture. So that is that. So you realize that these are the real activities of the management accountant is involved in this one. He collects information, all right, that will help. So you see that is we sometimes distinguish these things, management activities in the private sector economy and management activities in the public sector economy. All these things we have mentioned is more of a private sector economy, because we will have to measure our performances. So as part of the control, you see, we have to measure what we have done to see to the budget. So even there is performance management here, performance measurement, sorry. So this is the content of your uh, performance measurement, all right, exam, or what we call management accounting, advanced management accounting, or managerial accounting. These are all the big 4 topics that goes into the course. So that is what we will be doing, all right? We will be carrying out all these things, all right? But in the public sector, you see, the objective of the public sector is the welfare of the people, all right? Is the welfare of the people. So over there, we look at just value for money in public sector. We look at just value for money. And value for money is expressed in economy, getting quality things at a cheaper price. All right. Quality, the thing is quality, but cheap. All right. So cheap price, not cheap quality, but cheap price. All right. Then we say that you have to be efficient with those quality resource that you bought at cheaper price. So we are saying that give us more output, all right, from the little input. If you do that, then you will be effective, which simply means that you are meeting your target, all right? So meeting target. So if you say somebody is effective, then the person is meeting target, all right? So these are what we do. But since it is public sector, whilst you are carrying out all these major 3 things, you have to do it transparently. Transparently. So transparency is part, and you have to do it equitably. All right. You don't need to be cheating people. And these are issues of ethics that we are going to look at. All right. So the management accountant in the private sector will go through all these things. Private sector. To be able to achieve their objectives. The objective in the public sector is value for money. So non-profit sector, this is what we are looking at. All right. And because we brought in the concept of equity, we need to learn something about ethics, right? So you see clearly that in your first lecture of management accounting, these are the areas. We've gone through this, right? We've gone through data and information, all right? So we spoke about that one somewhere here. So data on processed facts, all right, information process, we should have these qualities, the accurate qualities, all right. And also, we are coming to look at the ethical issues in there. The ethical issues is the same thing everywhere. Then later on, we will consider technologies in all these things that we are doing. We will then end with the distinction between the various accounting, majorly the three cost accounting, financial accounting, and we will put together a definition for one accounting. Right. So let's go through there and talk about the ethical considerations. All right, these things are the ethical consideration. I've done a separate video, a whole video on ethics, all right, on my channel, so you can take a look at that. So let's look at the ethical consideration. Now, the ethical consideration is the same in all the courses, all right, is the same in all the courses. So here, our focus is the IFAC code. You see, one thing you should understand is that we are dealing with data. And we say somebody should provide accurate data with all the meanings of accuracy, all right? So somebody should provide. So it means that you need to do the work ethically. I mean, do it with integrity. So when we were talking about the ethics, the I-55 code of ethics come in, which you can use the acronym COPY for that, where I is for integrity. All right. What does it mean? Integrity means be honest, be straightforward. All right. That is that. So that is I. It means have integrity. So it means that the management accountant should not associate with himself with information that are misleading. You have to give accurate information. All right. So that is that. Then my O will be for objectivity. What does objectivity means? Objectivity means that you are not biased. You are not under any undue influence. No undue influence. There is also no conflict of interest. So you are objective. You don't stand like the way we discuss things here in our part of the world, Ghana, precisely in everything political. No, you shouldn't. If you are a technocrat, you shouldn't play a part in all those things. You have to speak to things objectively. All right. Then I'll pick one of the P and call it professional competence. Professional competence. Competence. Professional competence and due care. All right. Meaning that you have to be very knowledgeable. Competence simply means that you are professionally knowledgeable. So obtain knowledge. That is why you are learning from this channel. All right. And maintain the knowledge. Don't throw it away. Maintain the knowledge. Apply it. So the knowledge level of your ICA is there. The application level, which is the level 2. Then the professional level. All right. So that is that. So pass through all those things. All right. Maintain the knowledge. All right. And apply the knowledge. So when you are applying the knowledge, you have to apply it with care. We call this thing diligence. Diligence. Okay. So do it, I mean, perfectly as possible as you can. So you are a management accountant. You are going to give information. That information, you have to scrutinize the information. You don't present the information and say, hey, I made a mistake. Then they tell you that, okay, correct the mistake and bring it. When you go, you correct the mistake, you bring it, there is another mistake. It simply means that you are not carefully doing your work. So like this one we are doing in terms of our lecture, you are supposed to take your time and learn what I've taught. Then use it to solve past questions. All right. So you take your time, you learn it well, you reproduce what you have learned in your own English, all right, and you will produce that thing in your exam. So do it diligently. Don't learn it lackadaisically. Take it serious, all right? So you will make it. Okay. Fourth thing is I'll talk about the C, which is confidentiality. Confidentiality. What is the meaning of confidentiality? It means that you should hold in secrecy information you have as a management accountant. You shouldn't be going out telling people. If you want to tell, then you need to seek permission. All right. You need to seek permission. Unless it is a circumstance where you are required to release the information without the permission. Because if it's something is illegal, all right, here we are talking about illegalities. Other than that, please seek permission. All right. So that is that. Hold dear. Don't use the information for your personal gain. All right. Hold dear to the information. Then lastly, P is professional behavior. Professional behavior. What does it mean? It means that do not behave in any way that will bring disrepute to the profession of accountant. All right. So you see, what will bring disrepute if you are not honest, if you don't have integrity to bring disrepute, if you are not objective, it will. If you don't work well as a management accountant, people will say that, so is that how accountants are? If you don't hold information, people, again, like you talk too much. In fact, the good book says that be patient in talking, but be quick to listen. All right. So don't talk too much. All right. So that is that. So do not behave in any way that will bring disrepute to the profession, and that is your behavior. So your activity, your actions, and your inactions should not bring disrepute. All right, to the profession. Let's protect our profession. This is the best we have. I was telling some group of people, my corporate reporting class this morning, that even God is the first accountant. You know that because when he created the world at a point, he said he saw that it was good. So he was giving accountability of what he produced. And those of you who are familiar with the scriptures, well, even in Genesis chapter 15, Abraham did something and the Bible says God accounted to him as righteousness. So let's be proper accountants, all right? In fact, some version will say, and God recorded bookkeeping, all right? So that is that. So this is the best profession you can have, all right? This is the best profession. And if you are have the best profession and you are also a Liverpool fan, like the way my Liverpool, then is the best thing you can have, all right? So all proper accountants are Liverpool made, all right? So that is that. Anyway, that's just by the way. So that is the ethics, all right? So the examiner will create a scenario for you, all right? And the threat to these ethics things, these are the ethics we should uphold. But you see, these ethics are threatened. They are threatened. And we classify the threats into 5. So understand the difference between the code of ethics themselves and the threat towards those ethics. So we have the self-interest threat. I call them the SAFI. All right, the SAFI. We have the self-interest threat. So we said that don't release the information, right? But you want to release the information for your personal gain, right? All right, when you find yourself in that situation, you are thinking about yourself. All right, so self-interest is when you have a financial interest. Not only financial interest, I add emotional interest too. All right. People don't want to do the right thing. People, when the government is doing things that is bad and you talk about it, people don't want you to talk about it because they are gaining from it. And they are also emotionally attached. All right. So that is it. Number 2, the second S is self-review threat. Self-review. Self-review. And this thing in governance, in public sector, we call it nepotism. Using your own people to do the work. How do you then adjust them, do proper performance evaluation on their work? All right. So it technically means that you are appraising your own self. All right. You are reviewing your own work. That is what it means. And it is not a good thing at all. Not a good thing. Then the third one is advocacy. Advocacy. So advocacy simply means that you are acting on behalf of someone. All right, you are acting on behalf of someone. It's all gearing towards these interests. All right, that is that. Then number 4, the F is familiarity. As for that, I don't need to talk about it plenty. We all know what familiarity can be because people even don't respect people because of they are familiar with them. Then the last one is intimidation. Intimidation. All right. So you take my video on audit. I've explained these ones in detail. You normally use these ones in answering audit questions. Or if you are given a question and you are asked to find out the threats that are inside there, all right, you can use them to talk about it. All right. So basically that is that. And that is it. So lastly, we look at the technological aspect of this course. We have been asked to talk about technology as part of the first lecture. All right. And so we are going to talk about the impact of technology, because you see, the issues are that these days technology is evolving. It is changing everything. So we look at technology and man accounting. Technology versus management accounting. All right. Now, what technology has been doing is that the routine works that are done by management accountant, technology is used to automate them. So the impact, one of the impacts that technology is making is that those who are at the operational level, their work is being taken over because their work is routine. You will see that we are using technology to automate automation of routine activities or routine tasks. So one thing that is going to happen is that they are using robots. All right. So there's something called robotic process automation. Robotic process automation, RPA. They are using it to automate. This is where AI and robotics are coming in. So you see also that another impact of technology is that it is giving us real-time data access. Real-time data access. Some of you use phones, right? You can go to your phone and pick up records. Because why? The information is stored on cloud. So we have cloud-based solutions to stuff, to things that are happening now. And here you see that the ERPs, the enterprise resource planning, all right, the enterprise resource planning system are providing us with this real-time information. All right. And you see, because of that, it is enhancing reporting. It is enhancing reporting. All right. Because people are putting reports in visuals. So graphs and stuff. That is what is happening. So they are using business intelligence, BI. They say we have something called emotional intelligence. There is also something called business intelligence, whereby you create a scenario, all right, for the IT equipment, and it is able to even predict for you some things. All right. So it is able to do that. So you saw the decision making that we talked about. So the technology is giving predictive analytics. Even in football, technology is there. So that is what the technology is impacting the management accounting activity. So it is giving predictive. So they use, and here majorly machine learning. They are using machine learning. So they create scenarios. All right. They create scenarios, and by simulation, it is able to predict what you want to do. So you see, very soon, budget activities, they will create the scenario under which the budget is going. So put in the input information. All right. So input the data, processing the data, and the data will be able to give you your budget. So very, very soon, that is where we are gearing towards, because they are going to create the scenario, simulate it, and the technology will create the budget figures for you. That is what is going to happen. That is what is going to happen. So we just need to understand that the technology has started its way in all these things. All right. So you see that technology is impacting things. And again, all this, it is said that it provides a more accurate analysis. Yes. accurate analysis, because human beings are so prone to mistake. Technology usually reduces all those mistakes. So that is that. That is how technology is impacting management accounting. So you will see that the technology, like I said, in terms of management accounting, the forecasting, budgeting that we are doing, technology will affect the forecast. How will it affect it? Because they will create a scenario for it, and the technology automation that in the forecasting will happen, because normally you do a routine thing. All right, when you give it huge data, even big data analytics, internet of things, they will use all those things to actually function in terms of doing the budget. All right, so it will give you a predictive analysis, all right, of that. So the automation, the scenario creation, simulation, all right, using internet of things. Haven't you seen that these days when you are entering a banking hall, especially Africans, these things in the Europeans, if you are those of you doing the ACCA, you saw it early, that when you get to the banking entrance, it opens itself for you. So all these things are happening, all right. So that is that. It is happening, all right. So basically, that is that. We are using digital tools, digital technologies to actually automate financial processes. We are using digital information to actually do planning now. So that is what is happening. In fact, the technology is said to be more compliant. Technology is said to be more compliant, remove all ethical issues, because it looks as if the technology is going to be biased, then it is set up to be biased. The technology doesn't become biased in its activity, then it means it is set up to be biased. So it means that if you have a proper technology, ethically sound technology, you will have it. And most importantly, technology is impacting management accounting because we make decisions, it is data-driven decisions that are made. Data-driven decisions. All right. So that is that. That is what is happening. All right. So basically, that is that. We may talk about cloud computing, a system whereby you use the internet. All right. Internet-based software to manage your financial record. We call it cloud accounting. You use the internet to manage your accounting information. We call it cloud accounting. All right. So using the internet-based software, the ERPs, internet-based softwares. So like the enterprise resource planning. So those of you are using QuickBooks, like online and all those things, you use it. Now, why? You realize that these things gives you proper accessibility. All right. So you can access the financial data from any location. That is it. That is the impact. And it's still the same thing we are talking about. Again, we are into automation. All right. We are able to integrate, because it doesn't matter where you are, you can integrate information. All right. You can in fact, as for the automation, you can do your invoices and do all things at the same time. All right. You can integrate information too. The person, HR is on it, the ERPs, HR is on it, accounting aspect is on it. So everything is inside the software. You can put it all together. All right. You can put it all together. So you can scale up. Scalability is there. You can increase it as and when by buying a more data space. All right. And because you have real, we call it real-time update. Everything that you get is real time. It's real time. So you realize that as far as automation is concerned, what it is actually doing is that it is improving efficiency. All right. So what it is doing is that it is making us more efficient, solve our security issues, data security issues. All right. And help us with compliance. technology is doing much, all right? But one thing we must talk about is the fact that there can be data breaches. So that is the downside. The risk is that there can be data breaches. People can hack you. There can be downtime. We were here in Ghana, they said some cable under the sea has been disconnected. And we suffered for a period. We were not having internet. It can happen. The third thing is that you depend solely on the vendor. So vendor dependency. Vendor dependency. Let's say we are all using Facebook, we are all using IG, we are all using TikTok, we are all using all those things that we are talking about. What if one day we are there and the person who is running all these things, he has every data of us. Now he decided to go wayward with it. What happens to you? That is that. What happens? Whenever you create a Gmail, you use your phone to do something. You think you are doing it. People are having access. Whatever you are using the phone to do. It's just that there is data secrecy and that person must hold it in secret. He per the link that you are using, they can determine where you went to, what you watched, everything. It's possible. And mind you, there are some offices who does that. So if you use, they've created a Gmail for your account. So something at so company.org and all those things. Once you log in, whatever you use their internet to do, they see you. They see you. All right. So if you are doing something bad with your office computer, be careful. And then go and use your own personal computer. All right. So just be careful of that. Be careful of those things. All right. So basically, that is that. There is something called business process re-engineering, where people decide to re-engineer their manual system and integrate the IT stuff that we are talking about. So it so happens, all right. So we will talk about these things more when we are dealing with systems, performance management information system. Because if you look at it's called business processing engineering, business processing re-engineering. All right. So you are business process re-engineering. So you are kind of translating the manual system and you are bringing in the technologies. Re-engineering. All right. So basically that is that. So what happens is that you are bringing IT into the system, all right? And so what you look at is the business process, not the human beings. So the process that are in your offices, okay? How are you going to automate them? So the end-to-end process, all right? How are you going to work or automate them so that you can actually have a smooth running organization? All right. Now, the key principles in this business I call it the BPR, business process reengineering. The key principle is that it focuses on the processes. It focuses on the processes. So when you are doing that thing, it is process oriented. The focus is on the processes. When you are doing reengineering, that's your focus. All right. That's your main focus. All right. Then it is customer centric. Let's make sure that what you are doing is because of your customers, so that at the end of the day, when they are happy, you get more. We use technology. We use technology. All right. And the essence is to empower your team members. These are the principles, all right? And you bring about a radical change. So if you want the radical change, this is what you do in your offices. All right. So that is that. So find out, the steps are that you find out those processes in your office that needs re-engineering. You analyze them, all right, then you improve them. So identify the process, analyze the process, that, should I bring in technology? And if I do that, it will reduce the bottleneck activities or the limitations. All right. So once you do that, you will see opportunities that you need to improve on. Those opportunities. Okay. So the moment you find those opportunities, then you apply the new design. So you change, you bring about the change. Okay. So you bring the change and implement the change. All right. So you see that once you do that, the future is getting clearer and you monitor it. All right. You monitor it. So these are what you go through. The fact is that when you bring technologies, you enjoy the benefit of the technology. But you see, like I said, technology has its own issues. All right. Let me even add one, especially since I'm teaching you from an African perspective. Culture is one of the things. All right. Culture. And because you have done all these things, you have to pay money to hire experts. All right. And it is part of the vendor dependency. You have to bring people in to check, because over reliance on technology is something we, the Africans, we abhor. All right. We abhor that thing so much. All right. Lastly, let's talk about the sustainability. So we want you to understand that everything you are doing has to be sustainable. All right. So there's something called sustainability cost management, or sustainable cost management. You need to manage your cost. All right. You need to manage your cost. And the principle here is where we talk about the triple bottom line, where you are looking at things economically, environmentally. So economic is part of them. So here we are looking at the shareholders' wealth. The environment, we are looking at your relationship with the climate, and the social, your relationship with your staff. All right. And we will be learning something, not only this, we will be learning something of life cycle costing. And we have already talked about efficient resource allocation and compliance to risk ethics. All right. So we spoke about that, the ethics and resource allocation, efficient resource allocation. All right. So you develop these habits, all right, just to make sure that your expenses doesn't go overboard. From here, we this is where we have the green concept. All right, you and the society, you do a proper life cycle of things. When you do all these things, you know that the benefits are that you are going to enjoy long-term saving cost. All right, we are all going to have a proper regulatory environment and enjoy a safe, sustainable environment. Okay, so basically that is that. But all these things come with cost and complexities in terms of measuring performance. All right, so these are the things. Let me end this class with a definition of management accounting and the difference between management accountant and the financial accountant. So in all that we've said today, what do you think management accounting is all about? In all that we've said today. So when we say management accounting, what comes into your mind? How will you define management accounting? Well, I will conclude by saying that management accounting is about gathering data, the data from both internal sources, external sources. When I get the data, I process the data. You saw that, you said that. So from the operational level, we do that. I process the data, all right? And when I finish processing the data, I communicate the data. So I communicate. Communicate. Or I am using that data. So this data becomes information. So I'm communicating the information so as to use that information to plan. So you are communicating it to management so that they can use it to plan, make decisions, and control, monitor, measure all these things. You are controlling your operations in all these things so as to achieve your organizational objective. So that is how I will define management accounting. You see, so you see that is it. All these things are not done by any external person. So you see, management accounting is an internal focus activity. All right, it's internal, it's inside the entity. Well, SEMA will say the SEMA landing, according to SEMA landing, it's an integral aspect of management, and it involves you identifying and presenting and interpreting those information so that management will formulate strategies, will plan and control, will make decisions, use resources well, all right, and disclose to shareholders and other stakeholders in the entity how they have safeguard assets and they are actually managing the resources. So basically, that is that. All right. So that is management accounting for you. So you define the thing from your understanding, not Babadie concept like memorizing it. So if you pick man accounting and financial accounting, of course, we will look at cost classification and stuff in our next lecture, because you also there is another branch called cost accounting where you account for cost, how you bring in cost, develop a cost for a product. So for man accounting or management accounting and financial accounting, there are some differences. You see, the audience for financial accounting is usually the shareholders and outside bodies. All right. So what you see is that management accounting, those people that you report to, the audience or the receivers of the information, is purely internal. But this one is both internal and external. So, the management accounting is for your heads of department and your managers. But this one, the GRA and all those people are interested in. All right. So that is that. Now, again, let's look at reporting frequency. How frequent are you supposed to be providing the financial management? This one, it's because it's internal, it is usually on demand, very frequent. All right. But as for accounting, it is usually an annual staff or a quarterly staff. Annual or quarterly. But this one is on demand. As you need this decision to be made, you do that. All right. So that is that. But you see, as the name implies, the focus of management accounting is both financial and non-financial. All right. Financial and non-financial. But as the name financial accounting implies, we are just interested in the financial figures. It's solely financial. All right. Nobody, in terms of regulation, nobody regulates how management accounting is supposed to be. So here it is very flexible. But here, it's either you are doing it according to your IFRS or your GAAP. So there are strict ways that goes around it. All right. Now, in terms of time orientation, management accounting, as we have learned today, is futuristic. We need the information for future. So it's more of futuristic, like forecast and budgeting. This one is historical. We are recording what has already been done. All right. So that is that. So these are the things that you can use to distinguish that. All right. So that ends our lecture today. We have been able to go through these 4 major areas of our first lecture, and I need you to get this thing done and understand it well with the explanations that we have gone through to it today. So basically, we have been able to achieve all these things in terms of, and here we are. All right. So what is going to happen? What is going to happen is that you pick the past questions from whenever, and you answer these areas up to date. If you are in Ghana or Africa, so if you are writing the Ghana ICAG or the Nigerian ICAN, wherever you are, because I am in Ghana, so these are nearby ones. I would advise that you get my management accounting book. If you're outside, you can buy the soft copy. All right. The essence is that, let me show you something here. So it's a big book. It's about almost 900 pages. The essence here is that when you go through, you see the content. This is what we are doing. So today we've been able to go through the introduction. We have a lot to do, right? All right. So these are the things. So now, this is what we achieved today, right? Is that not it? All right. So when you're able to go through this, we went through the strategic, the top level, the tactical, the middle level, then the lower level, we are the management. We spoke about this, the planning, what they do there, and the decision making that is in here. All right. So you see that the decision making is you selecting the things and implementing the thing. That is decision making. All right. So we spoke about accounting. Like I said, where you are also tracking expenses to determine cost. We call it cost accounting. We define management accounting in our own words. All right. All right. So this is the foundation of what we are doing. We went through to talk about data and information, the characteristics of it. All right. Then we spoke about the other qualities of management accounting information, faithful representation, and all those things. We spoke about it. We did the differences here as well. And we also talked about how it is done in the private sector and the public sector, where it's all about achieving the value for money in the public sector. We talked about the ethical issues, didn't we? We did all those ethics things and we discussed the threats, right? All right. So the ethical issues about data, misrepresentation of financial information, conflict of interest, breaches of confidentiality, we spoke about all those things. Then we spoke about the impact of technology. We went through to talk about that. All right. Our data is impacting technology is impacting everything. We spoke a little about cloud accounting. All right. Then the business processing reengineering, process reengineering. Talk about sustainable cost management. All right, where these are the things we look at. All right, and ways by which management accounting consider sustainability issues. So you identify and allocate cost, implement green budgeting, life cycle uh, life cycle cost accounting. We spoke about all those things. Developing KPI for sustainability, you have to do that when you are procuring sustainability and everything. All right, so you facilitate decision making with environmental data. So everything we are doing, we are just basically saying that consider the environment to it. All right, and we spoke about the fact that this thing gives us long term and it enhances your branding, real reputation. Those people who are doing more corporate social responsibilities and all those things, it enhances, and these things affect your profitability. Compliance to improve operational efficiency and have a competitive advantage. So these are the benefits of cost management. Of course, these things are highly expensive and complexity in terms of developing the KPIs. Very, very difficult for you to have KPIs for your environmental activities. All right. Uncertainties in calculating return on investments and all those things. So now, when you finish, you pick up the past questions. I did it from 2015. So here we started November 2016. The questions there. Look at the questions. Distinguish between financial accounting and management accounting under 4 different headings. I think we did that. We did that, didn't we? So we talked about the audience, the timing, all right, the regulatory, is it by force in terms of man accounting and all those things. So you can pick any 4 and use it to answer the question straightforward, all right? So we have actually gone through it. So there is no need to panic like that, all right? So you can answer the whole issues here, all right? So time orientation, futuristic, historical, all right? For each of the headings of planning, controlling, and outline the management accounting technique, all right, that and how it will lead to stronger commercial success. How did we talk about planning? How did we talk about decision making? How did we talk about controlling? That is exactly the same thing. Qualitative information, qualitative characteristics, or you say identify any three qualitative non-financial issues you should consider as a management accountant when providing information. Do you remember the qualities of a good information? And the qualitative ones and the fundamental ones, qualitative fundamental ones that we discussed. That is that. The role of a management accountant we've discussed. All right. Features of a control system at the tactical level. We've talked about all these. All right. Plain sources of information. State and explain 5 sources of information that you'll be considering. Of course, we talk about some of the external and the internal, especially the tactical people. All right. So basically, that is the operational people. So take a look. You go through the past questions. March 2024, July 2024, November 2024, all these things. So if you get the manual, when you deal with the chapter, you deal with all the past questions, then you know you are secured for that part. All right. So that is that. In our lecture 2, we will talk about these things. We will talk about concept of cost classification, how to do high-low segregation of fixed cost and variable cost after we've talked about the classification. Then we will see how we will do coding. All right. So get ready for that. And after that one too, there are past questions that you go through. So it's made easy for you. Get your copy of the book. I've told you that I've reduced the price to what, 350, right? The very big book, and all the past questions are also inside. You have ICAN, you have ACCA, you have ICAG. All right. So what do you need? You have passed the paper. Thank you. This is my phone number. You can contact me, send me a message on YouTube. All right, and I'll respond to you. Thank you, and God bless you. Have a great day. Bye-bye.